Scotia Group Jamaica, as with all of Scotiabank's international subsidiaries, benefits from the strength and stability of the entire Scotiabank Group. In 2010, Global Finance magazine named Scotiabank one of the world's 50 safest banks. We also benefit being based in Canada, which the World Economic Forum has named the soundest banking system in the world 3 years in a row. Across our operations, we are defined by our culture of values that are rooted in our key strengths of diversification, execution, efficiency, and risk and expense management. The careful management of our risks and our expenses has helped keep us strong and stable over the long term. We support our customers and provide good returns for our shareholders through economic up and downs, as well as a few crises. Looking ahead, the continued difficult economic conditions over the past several years here in Jamaica have called for the careful management of our business. However, we know we have an important role to play in helping our customers achieve their financial goals and in the continued economic development of Jamaica. Bruce and his team have led the way from building deep and long-lasting relationships with our customers to demonstrating a strong record of long-term success for our shareholders. We remain absolutely committed to Jamaica, just as we have been for more than 120 years. We see great potential in the people and the businesses of this country, and we look forward to working with our customers in the months and years ahead. I would like to thank our shareholders for your continued loyalty, and I would also like to thank each and every one of our customers for your business and for placing your trust in Scotiabank. Thank you. I would now like to invite the President and CEO, Mr. Bruce Bowen, to review with stockholders the company's operating results for the past year. Mr. Bowen.
I want to take this opportunity to express thanks and appreciation to our former chairman, Robert Pitfield, who many or most of you will have met or remember from previous AGMs. Rob ably conducted the affairs of both of these meetings and provided oversight and guidance to Scotia Group Jamaica since 2003. We want to thank him for his insight during that period of his leadership. It's also my pleasure to welcome Brian Porter as our new chairman and to assure him that on behalf of management that the entire team is committed to maintaining Scotia Group's position as the financial institution of choice in Jamaica. I also want to take the opportunity to welcome two new directors that joined your board over the past year, Sylvia Kreminska and Claude Norfolk, who were introduced. And I want to thank all of our customers and friends who joined us at a special welcome cocktail on Monday evening to welcome Brian, Sylvia, and Claude to Jamaica. So turning now to the financial results, and much has been spoken when talking about the financial sector, that 2010 represented one of the most challenging and trying years in recent memory. Our fiscal year 2010, and it seems a long time ago, started in November 2009 at a time, as you may recall, that there was huge pressure on the Jamaican dollar, was pressure, a devaluation pressure. Market interest rates were over 20%, unemployment was rising, the economy was contracting, and a lot of the economic pundits were wondering when we were going to hit the bottom of the economic cycle. During the year, Jamaica entered into a formal standby agreement with the IMF. The country restructured its domestic debt under the Jamaica Debt Exchange, and Scotia Group Jamaica tendered just short of 100 billion Jamaican dollars into the Jamaica Debt Exchange. As our fiscal year ended in October 2010, Jamaica had seen more than 6 months of stability in market interest rates and foreign exchange rates. Notwithstanding those unprecedented challenges and turmoil during the 12 months of our fiscal 2010, the fact that we've weathered that storm with such resilience as a country, as a people, and as an organization only confirms what we all know so well, is that Jamaica as a country is outstanding, and that your company, Scotia Group Jamaica, is an excellent organization. Thank you very much. I'm very proud to have the privilege of leading a team of true professionals that continue to remain true to our mission of being the financial institution of choice by providing quality products and excellent service in order to help our customers become financially better off. This morning, I'm pleased to share with you the results of our efforts over the fiscal year ended October 2010, as well as the first quarter of this new fiscal year. Our first chart speaks to our earnings growth and our net profit. Scotia Group recorded net income of $10.4 billion for the fiscal year ended October 31st, 2010. And while this was less than the $11.1 billion reported for fiscal 2009, it is still the second highest earnings ever reported by the bank, and allows us to boast a 10-year annual compound annual growth rate in earnings of over 15%. The biggest impact on earnings last year was as a result of the JDX. In February 2010, we exchanged a total equivalent of $91 billion of Government of Jamaica securities, yielding average rates of approximately 17%, for new securities with average yields more than 600 basis points lower. We also saw significant declines in benchmark interest rates. For example, T-bill rates, a reference rate against which the largest corporate and public sector customers borrow, fell by almost 10%, 1,000 basis points, from 17.04% at the start of the fiscal year to 7.92% at the end of the year. This, of course, had a significant impact on our interest revenues. However, through careful management of interest margins and tight expense controls, we were able to withstand the impact and still post credible earnings results. Now, earnings per share. And in keeping with the trends in earnings per share fell for the fiscal year 2010. The earnings per share was $3.34 compared to $3.58 the year before. Still, over the past 10 years, earnings per share has recorded a compound annual growth rate of 14.4% after adjusting for bonus issues. Looking at the revenue side of our income statement, growth in revenue. Notwithstanding that significant negative impact of the JDX, total revenues were down only 2% over fiscal 2009. This can be attributed to prudent management of interest margins during the 3 quarters that were impacted by the JDX, together with the diverse revenue streams that we enjoy. We achieved a compound annual growth rate of 15% in revenues over the 5-year period ending October 2010. Another significant impact on earnings was, over the past few years, has been provisions for credit losses or impairment losses on loans. In 2009, you may recall we experienced a significant increase in PCLs as Jamaica's economy plunged into recession and unemployment rose. During 2009, we reached out to customers experiencing difficulties and looked for ways to assist borrowers get through the recession. For 2010, we saw an improvement in loan losses, which fell by $275 million, or 15% compared to 2009. This decline was primarily due to a reduction in retail loan losses, especially credit card write-offs, together with an increase in recoveries. Non-interest expenses totaled $14 $1.479 billion in 2010, representing an increase of $593 million, or 4.3% over 2009. Salaries and personnel expenses were $7.694 billion, an increase of only $91 million, or 1.1% over 2009. This limited growth in overhead expenses is due to a combination of tight control of overtime and vacancies across the group, together with the results of contract renegotiations with a number of suppliers that started in 2009. Prior to 2010, expenses had been growing at a 5-year compound annual growth rate of 17%, and we therefore are extremely pleased that we've managed to break that trend and contain our growth in operating expenses to only 4.3%, particularly when inflation over the period was 10.4%. Our productivity ratio, which measures the total non-interest expenses as a percentage of total revenue, stood at 52.72% for 2010. This represents an unfavorable increase over 2009 and is attributable to the fact that total revenues declined while total operating expenses increased, albeit marginally. This is an area looking forward into this year that we need to improve. Now, contributions by subsidiaries. And if we look to the contribution to total group earnings from key business lines, the retail and commercial bank, BNSJ, continues to be the largest contributor at 48% of group profits, with after-tax profit of just over $5 billion. Our life insurance subsidiary, Scotia Jamaica Life Insurance, performed well again this year, increasing its contribution to group profits from 31% in 2009 to 37% in 2010 due to a steady growth in policy sales, effective management of the existing book of policies, and again, tight management of overhead expenses. Scotia DBG Investments and our Building Society contributed the remaining 15%. Yesterday afternoon, at the close of the market, we released our Q1 2011 performance for the period ending January 31st. For our first quarter, we posted net income of $2.687 billion compared to $2.804 billion for the same quarter last year, a reduction of 4% year over year. And you'll recall that last year in our first quarter, we still had interest rates pre-JDX.